Hi guys, welcome back to another important video. In this video, we're going to talk about a positional setup plan for the major time cycle zone. This is going to be the focus of the video. Right now, you already know that this major time cycle zone is very, very important for us. We have discussed this already in the December month strategy video. This is the last video I posted. Now, there are some important details which everyone misses. We're going to include that also. Before that, I want to quickly check up on the price structure of the market. Here we'll have Nifty and then we have Bank Nifty also. Bank Nifty is in a very, very important stage. We'll talk about that also. First, Nifty. Nifty, what happened last week was there was a fast pump in the market. Now, this pump went all the way to ATH. Let me just tell you something very, very important. When you see pump moves near all-time highs or near swing highs, this was a previous resistance, market breached it. What was the pattern of this breach? It went up, fast one-way move, entire thing got recovered, retraced. Okay, so who got trapped here? Your breakout traders got trapped here. Your SL of bears was hunted. So this was basically a small trap. Same thing. What do you see now? Now, what do you see? Same thing from here. There's a fast pump in the market. Before this pump started, there was a sharp reaction on the downside. So what happened here? It broke this swing low, correct? When it broke this swing low, your breakdown traders got trapped. Your bulls SL got hit, and then market went up in one-way direction. Again, it took out your SL of bears. It again trapped your breakout traders and came back down. So basically, what do you understand? What do you understand by this price action? They are shaking out weak hands from the market. And this is what I told you last week when the market was rallying. We are looking for a shakeout after ATH. After the ATH, market will come back once towards 26,000. That is what happened. We had a 300 point fall in Nifty. Now, this 300 point fall in Nifty is, let's say, it came in 2 days. But in Bank Nifty, you see, this is a 700 point fall. It's not small, it's a big fall. And this is, we expected this fall also. Some of my private group members already shared this wave count with them. I told them that we are expecting a fourth wave fall to happen here. Now, question is, how do we connect this with your time cycle zone? Now, time cycle zone is very, very important for us. And this week, the expiry happened near 26,000. Last week, in this rally, in the rally here, let me just give you an update. There was a rally last week on 26th. Here, this was the blinding rally, fast rally 26th. On 27th, market went a little bit sideways. But at this point, I told you in the Telegram group, those who are connected, that somebody, some big player, big boy, basically, big boy has taken shots in the market. And for the weekly expiry, contract of 26,250 call option short. And with this, they have hedged it with your 26,400, I think 450, as my memory serves me. This was a combination. They shorted call option. They have bought it this higher level call option. So this is nothing but a spread. Okay, this is a bearish spread, bearish call spread, and market, they expected it to close near 26,250 for the weekly expiry or below it. Where did the market close? Below it. Okay, so this is something of my private research. I'm trying to find out the operator footprints before the move happens. Now, with that is not possible if I don't know market structure or what is happening in the market, where a turn can come. So when a turn is expected, there you want to study this sort of, volume analysis or whatever you want to do. Okay, this is just a small hint I'm giving for those who are doing their own research. Now, let us get into the main part of the video, the major time cycle zone. This major time cycle zone is going to start from 4th December to your 10th December. You think this is a very long period, but no, this is just 4th is Thursday. 4th is Thursday. 5th is Friday. 6th is Saturday, Sunday. 6th and 7th. And then we have 2 days. which is your 3 days, Monday, Tuesday, Wednesday. That is nothing but your 8th, 9th, and 10th. Now, this 8th, 9th, and 10th, this period is very important for us. Why? Because we have your Fed event, Fed FOMC. Many big players abroad in Indian market for investors, they use capital nearly more than thousands of crores, okay, 1,000 crores plus. Their movement or their decision in the market can impact your underlying stock or underlying index like Nifty, emerging markets. So why will they do that? Question is, why will they do that? Why does US Fed outcome impact Indian market? Why? Because once these big players or foreign players, they want to shift some strategy in US, or they want to move from stock to gold. Okay, they want to do that. So what happens to stocks? It goes for a sell off, and money flows from stocks to gold. So gold will rally. Same concept here. If this idea of they want to sell stocks, they want to sell stocks in US, they want to book their profit, they will shift money. Okay, they will shift their money to another market. Can be Indian market, can be Chinese market, it can be Malaysian market, Singaporean market, anything. So basically it is a global chain event, chain reaction. Okay, I hope that is clear. Same thing if they think that I have a loss in US market, if some based on the Fed outcome I have a loss, they will book that loss. Also, they will book profit in Indian market to balance the books. So basically it's just, again, like I said, one position here, one position there. I hope that's clear. So that is why it's important for us. Same thing with the CPI data. CPI data, dollar index, bonds, all that is one another simple game. We are not focusing on that. My main focus is that major time cycle zone starting. How do I find a positional setup here? What is my plan? I'm going to break it down into a very simple logic, and I'm going to explain it later for those who are studying the Elliot master course and those who are studying the advanced concepts. I'll give you a small hint of what is the structure and how do you read it. First, very simple observation. What happened on 26th November? There was a strong pump in the market. There was a strong pump in the market. This is your 1 hour chart. I'm going to the 15-minute chart, and let's see what happened there. What are these two levels? 25,899 or 900, you can take it. 25,842. What happened on your Thursday of, so this is I think Wednesday of last week. Here market gapped down. Okay, market gap down on this level of 25,842. This is your pre-market open. Pre-market open. But the first candle open was here at 25,900. There is a big gap between the pre-market open and the first candle. Who can make this kind of a gap? Question. Can a retailer, can I do it? Can you do it? No. There are players who invest huge amounts of money in the market. They're called big players, which I often refer to them as operators. They're not wantonly doing it, or they're just shifting their position, whatever may be the reason. This gap can only be created by them or based on their actions in the market. Maybe it can be a side effect of their actions. So this becomes a very, very important zone for us. Clear? This cannot be done by retailers. This is a big player gap. Simple. Now, what we're going to do is we're going to base our entire analysis based on this gap. Because if this is created by a big player, they know what they're doing. Now, I'm going to break the logic down. Simple. Positional longs. When will I plan for it? Positional longs, I will only plan for it below this level. I hope that's clear. This is something which is not very clear to many retailers, that retailers know that breakout, I will take position long. No, I am doing something else, something opposite to it. I am planning for a long if market breaks down this zone and then market tries for a long, I will use this zone as a confirmation and then I will plan for a positional long. Question is why? What is this logic? And why are we looking for a positional setup here? Like I told you that this major time cycle zone, we are expecting 500 points, nearly 500 points to 800 points move in the market. Why are we expecting this question? Why are we expecting 500 to 800 points? Based on the historical data we have, if you see all the previous time zones of this year, we had nearly 500 to 800 points move in the market. All these time zones, all of them, you can see them, all of these time zones. Okay, major time cycle zone, major minor time cycle zone, all the time zones. Minor time cycle zone, major rally came here, big one, big move here. Major cycle here, we had a 500 points fall, and then market in this range itself, it was stuck for a long time. So we have all this data with us, and then that is why we are expecting a move in the market which is approximately your 500 to 800 points done. So we are planning for a positional setup. Logic here I have told you is that I will look for a positional setup if market goes below this once between 4th to 10 December and then goes back up. And I will use this zone as my confirmation for your positional setup. If it comes back down again, even better. Continuation N pattern, simple, it's even better. Okay, so this is my idea of a positional long. Now positional shorts, why? Okay, again, more deeper logic I'll give you. Why should I not plan for positional longs on a breakout? This I've already told you before, that we have discussed this many times. The structure of the higher time frame, those who are studying your wave theory with me, and those who are studying on their own, they know that market is going to come back to this level again, 25,153. Recent move from here, the recent move from here, for me, it looks so far like this. So far it looks like this for me. Okay, so this is the logic behind those who are studying wave theory, that if this zone is broken, this small operator which created a pre-market gap zone goes down below it, and then they again to take it over, the bulls take over, and then I look for a position long. Why? We are looking for 500 to 800 points. That is why the time zone will trigger a 500 to 800 point move for me. That is why I'm looking for a positional long if this happens. Now, same thing, positional short. What to do here? Positional short. Can we take a positional short on this breakdown then? Just now I told you we cannot do that. I'm looking for a long. When will I take a positional short? Simple, very simple. Market should not break this zone. From here, current market, I'm recording on the 2nd December. Market should not break this zone. Price go back higher and then fall down. Simple. Then we will see the swing here. You take this swing and then you can mark 50% of this entire rally. Then we can look for a first target here on the positional short side. Second will be a small gap here. We have to take care of this gap. And then we can look for a swing here. All right. So this will easily trigger for us a nice 500 to 800 point move, this fall. That is the logic. Based on what? Based on this pre-market gap created by the big players. Simple, not complicated. It is very easy to understand. The question is, what if I can, why can I take intraday setups? Can I take intraday setups? Intraday players, it's your wish how you do it. This is a video mostly for positional logic, and here you have to understand the longer time frame move so that you can have the same idea and you can connect intraday moves to your larger time frame. So quickly, long side intraday players, please be safe. And if you want, if this zone is not broken on the downside, it is smart any up move to keep intraday only, because whatever up moves is coming, it's getting sold off. This fast up moves are getting sold off. This fast up moves, next day correction happens. So logic is very simple. Distribution is happening on the higher zone. Okay, so do that. Be safe here. Don't try any gimmicks. It's a very simple logic I've given you here. 4 to 10 December. How do you plan your setup? Let's quickly just connect this with your market structure. Let me look at Nifty's chart here. Nifty chart here from the low here. We're talking about Elliot Wave Master Course now. Those who are studying wave theory, I am taking this right now as a diagonal pattern. And this diagonal pattern, it's very complicated right now because of this overlapping waves. There's difference between your Gifty chart, your Nifty futures chart, spot chart. So all three of them are telling me different stories. So what I'm going to do is I have to choose one. I'm focusing on the spot chart right now. I will look at these two charts on my own time, but I'm not taking this as main charts. I'm taking my spot chart as main. This is where I'm doing all my analysis. So in my spot chart, what I've done is I've taken this as a single wave down, and now a single wave going up. Okay, I have taken it like that. So this is nothing but I'm planning this as an A, B, C, and I'm planning for a D wave down. I'm looking for a D wave down. This is my diagonal pattern like this. You can take this as a 1, 2, 3, 4, and 5. So after this, yes, I am expecting a rise in the market. But first, let me focus on this part only. This, if it comes in our time zone only, right? If it comes inside our time zone only, this fall will be very good. But again, this will trigger for me, like I said, a long side positional move. Okay, below this zone. Now, Bank Nifty. Bank Nifty is a very important specimen for us right now because this is going to carry Nifty's move. We know that Bank Nifty index redistribution is going to start from, it already started or it may start anytime soon. This fourth wave is my current expectation. I shared this, like I said, with the private group members here. And here I'm expecting another rally to start anytime from here. It can start anytime. It can start now. It can start tomorrow. And this fifth wave has to finish again. So if this fifth wave has to finish in Bank Nifty, will it carry Nifty up? That's my question. Will it carry also Nifty up for another leg of the rally? We don't know that, and I don't want to speculate right now. It is possible that Nifty goes sideways here when Bank Nifty goes higher. It is also possible that, okay? So we don't want to, connect them right now. Let them play out on their own. We have a separate plan, which I just shared for Nifty. Bank Nifty is a bit more complicated. More manipulation happens there, and it is very easily under the control of the big players. So if you're playing Bank Nifty, I would highly suggest it should be only intraday. Overnight gaps can kill you in Bank Nifty if you're a positional player. Okay. Now, the logic and plan is very simple for this, and this is what we're expecting. I'll keep you updated. Like I said, usually in the Telegram group where live market updates I'll share what I see unusual activities. I hope you focus on the learning part, which is shared in the YouTube channel, the premium study material. Finish it, and then you can make ideas, make your own strategies on your own. Try to connect with all of us in the Telegram group. I'll see you in another video. Till then, take care and be safe.